All right, awesome. So, एक और वीक, एक और मार्केट रैप विद पंकज पांडे सर. सर, इंटरेस्टिंग वीक था काफी. मार्केट में वॉलेटिलिटी पोस्ट इलेक्शन हम लोगों ने पहले एक मूव देखा था जो कि इलेक्शन के एग्जिट पोल्स के बाद आया था, एंड देन वी सॉ एक मेजर मूव आफ्टर द एक्चुअल रिजल्ट्स केम आउट. एंड नाउ वी आर, while we were, वो डरावना था, वी आर बैक एट द, वी आर above in fact post exit results. So what has been happening here, sir?
So hi, good evening, Vishu. I think what we have seen is that key Nifty was consolidating for about 10 weeks. In between, we had this election outcome, and in that election outcome, we had nearly 10% kind of a correction. But good part is that historically, when we sort of look at even say from last year June onwards, whenever market sees a correction of say 8 to 10 odd percent, the rally is actually even more stronger at about 20 odd percent. And we've seen that even post elections also, typically the rally has been pretty good. So our sense is that with market sort of breaching all-time highs on a sort of a consistent basis and being comfortable there, so our sense is that going forward, 25,200 is very much in sight. So this bullish bias is sort of intact. And I think global setup is also okay. So when you look at while US is continuing to sort of make new highs, largely because of Nvidia, but overall setup remains good. So nothing much to complain from the market perspective. I think markets have been doing good, and our sense is that this kind of a momentum is going to be there. And since we have already seen 10% kind of a correction during election outcome, our sense is that given the historical perspective, probably a 20% kind of a rally to 25,200 is very much on the cards going forward. So obviously it will not happen in a single straight line. So you'll see corrections in between. And obviously you have the next big policy announcement is expected to be from the budget side. So I think that is the key parameter which is going to be watched.
Right, sir. And with that, sir, I think with the oncoming of new highs in Nifty has come about the clouds of rainfall of monsoon. So one is, how does that look? And second, what impact is it going to have on our stock markets?
So June is not a very great month for monsoon, but good part was that when the IMD announced that the monsoon has or the onset of monsoon 2 days ahead of the schedule, so there was a high hope in terms of that the monsoons are going to be good. But sadly, up till now in June, we are seeing at about 18% kind of a deficit. So that's not a very great news. But I think we are not losing hope from the perspective that see, July is the single most important month from a monsoon perspective. 1/3 of your rain, typically rainfall happens in the month of July, and which is where we are sort of keeping our fingers crossed, and which is why we are still not sort of taking any kind of a knee-jerk reaction because of the temporary weakness in the monsoon what we see. So we are keeping that bullish bias intact for sectors or segments which are going to obviously benefit from this normal or above normal monsoon. And I think one more data point which was largely good was that from an inflation perspective is that the MSPs what the government announced is largely in the range of 5 to 7 odd percent. So it's definitely not inflationary. And so from that perspective, overall, I think bias or positive bias related to monsoon is pretty much intact.
Right, sir. Sir, we also saw slew orders from the government to defense sector. So what has been happening there, and who are the primary beneficiaries there?
So defense is one sector which continues to sort of hog a good amount of limelight, and rightly so, because I mean what we have seen is that there is a RFP which has gone to Hindustan Aeronautics Limited for procurement of 156 light combat helicopters, and the potential order is quite significant at 45 to 50,000 odd crores. Mind you, HAL is already a big beneficiary, so their order book is somewhere about 94,000 odd crores. So this is another going to be a further addition to their order. So it's not that HAL is going to be the beneficiary. In fact, our sense is that you'll see even other companies like, say, for example, Bharat Electronics being beneficiary because helicopters also carry electronic components. you require missiles like Helena or Duvastra. So BDL also has a role to play. And then since helicopter carries engines, Shakti engines, so our sense is that even a company like Midhani also has a role to play. What we are liking in defense is HAL with a target price of 5,700 and Bharat Electronics with a target price of 330. So I think with this kind of a news flow, it is expected that the overall growth trajectory is likely to be intact for most of the defense companies. And let's see how further orders are needed. But this is definitely a shot in the arm for these defense pieces.
Right, sir. Sir, I think we also had a report come out around general insurance, and things look pretty rosy there as well. So what's the news there, sir?
So general insurance is a sector which is sort of getting exciting. One, I think there is an anticipation or the industry expectation that the GST rate should be lower on this because LI already carries a lower GST rate. And when you look at the growth numbers, both on the motor side or on the health side, the numbers have been pretty good. I mean, you look at in general, the industry has witnessed a growth of about 15 odd percent in the month of May, and for April and May combined also, you have a growth of 15%. Now, prominent companies which have done very well, one is ICICI Lombard, where motor has grown by 31%, and overall, when you look at health, has grown at about 28 or 29 odd percent. Star Health is another company which we have been liking, and I have highlighted also that this is one company which has witnessed a growth of about 19 odd percent in their overall premium accretion. And so these are the two companies which we are liking, and our sense is that this sector or segment is going to be in action in anticipation that government might sort of prune down the GST rates, because we all also understand that Ayushman Bharat is going to be one of the key flagship programs of the government. So obviously they are looking at better health penetration, and probably a GST rate reduction could be the right thing to sort of look at. So we're keeping our fingers crossed here also.
Right, sir. Sir, while this was also a news of the week, which was Bank Nifty, I think private banks का भी हम लोग का एक report आया था wherein they've been gaining market share along MSME loans, retail and MSME loans. So what's the news there, sir?
So when you look at private banks, historically it is considered that private banks are more efficient, obviously, and they have been growing faster than the industry. So when you are going faster than the industry, obviously the expectation is that they are gaining market share, and which is what the data clearly reflects. So private sector used to contribute 35% of the advances 4 years back, and now it's 42 odd percent. So obviously they've been growing far more better than their PSU counterparts. But we are not losing hopes for the PSUs or tier one PSUs like, say, for example, SBI or BOB. I think these are the two banks which have not really lost market share in the last 4 years to their private counterparts. It is the other weaker PSU banks who have sort of been impacted. And I think what our sense is that banks in general are one of the better ones placed from a risk reward perspective. And there are 2-3 things for this. One, I think the yield has been sort of softening, and from June 28 onwards, we are going to see further more inflows on the GSEC side. So that might keep the yield softer. Then the anticipation of rate cut in the second half possibly will keep banking stocks in limelight. And our sense is that bulk of the FI selling has been sort of absorbed, and which is why incremental buying is helping some of these private counterparts to sort of do well, and which is what we are seeing, that the private banks have started to sort of do slightly better than the Nifty. And our sense is that probably this trend is going to get stronger as we head into second half of this year towards the year end. So with banking doing well, it's a very important sector from a Nifty perspective. 1/3 of your Nifty is banking from weightage. So if this does well, obviously it augurs well for the Nifty. And I already highlighted that we are looking at Nifty targets of 25,200.
Right, sir. Sir, getting a little stock specific, I think there was a big news around Vodafone Idea, which at one point, of course, we all know the story. It's given as case studies in the market. But now, I think after a long time, they have released some of their cash flow problem seems to have, is likely to have some relief there. So what is happening there, sir?
Absolutely. I think Vodafone, with every incremental news flow, is looking to sort of solve their problems in bits and pieces. So they've sold or they've realized about 15,300 odd crores from Indus Tower stake. And I think good part is that overall now you're getting that confidence that it will be a three-player market, though we are still not expecting Vodafone to be very strong compared to what you see for Bharti or even for Reliance. But the market dynamics are going to be slightly better because with the three-player. And I think while this is definitely a good news for Vodafone, but I think the biggest news is still yet to sort of pan out, which is tariff hike. I think that that is going to substantially improve the balance sheet issues what this company is facing, and it is going to brighten up the outlook for the rest of the two companies. So I think incrementally this fundraise is definitely positive, but we are still sort of waiting for the bigger news to sort of unfold.
Right, right. And so my next question is about a sector that also caught a fancy of, I mean, it catches not only the fancy in the markets, but outside the markets as well, which is the auto sector. I mean, there has been a revolution in the industry, I think, over the past few years, which is also reflecting in the markets as well. So we have got Mahindra and Tata's coming back with a bang and with their new launches and everything. And we have got now there's a news of Hyundai Motors is also stepping into the markets, which has been a leader. So how are the dynamics going to play out from here on?
So auto is a very important sector from a manufacturing perspective. It plays a significant role, at least in our manufacturing output. So whatever happens in the auto is definitely a positive news. And what we have seen this week is a lot of positive news, especially coming from big auto players. So I'll start with say M&M. So M&M clearly highlighted that they're going to launch 9 SUVs now, which is one of the biggest sort of portfolios they are going to sort of launch. And of this, then I think they're going to launch 7 EV vehicles by 2030. So I think this is one company which is really going to ride the entire SUV as a segment. And mind you, they already have one of the highest revenue shares in this space, and they're looking to sort of sustain that. Volume is something they want to gain because see, while 15 lakh and above, they are already are a market leader with 24-25% kind of a market share. I think below that is somewhere our sense is that they are going to beef up their portfolio. So that is definitely a positive development from Mahindra, and definitely brightens up the prospect for M&M. We have raised our target price to 3,500. Another key segment for M&M is the tractor as a segment. In tractors, what they're clearly sort of saying is that compared to some of the other big global economies, our penetration is still lower, both for farm mechanization plus tractor itself. So tractor as a segment can easily grow at 5 to 7% on a sort of a sustainable basis. So M&M clearly is ruling the charts in terms of SUVs, and the pipeline is equally strong to sort of do that. Now, Tata Motors is also another company which is actually up the guidance in terms of capex, and not for domestic, but for the JLR operations. So that is a big positive. And while they have been improving their EBIT margins, and it's now in double digits, but their long-term vision is to sort of take it from say 10% to 15%, which is extremely positive from the perspective or gives a lot of confidence in terms of how the company is going to take up the competition there. So that is about Tata Motors, but Tata Motors had rallied, so which is why we have a hold rating on the stock. Now coming to Hyundai, now Hyundai we all know that has been doing very well. It is the second largest auto OEM in the country. And good part is that it is going to come at a decent valuation of say 1.4, which is what our sense is. It could obviously change depending on how the sort of pricing comes out. and they are also going to sort of be quite good on the EV side. So Creta EV is expected to be launched next year, and I think they're definitely giving a tough competition to our existing leader like say Maruti, and which is where the challenge lies for Maruti. So Maruti, if you look at, has been bit soft these days because somewhere down the line, Maruti is still not being able to sort of place products across the entire SUV spectrum, and this company is relatively better placed there. So, which is why a lot of excitement is there around around Hyundai, and this is the fundraise is largely going to go to the promoter. So it's not that the company is already well funded. So from that perspective, no major challenges you see on the balance sheet side. Numbers and growth, everything has been fine. They've been clocking market share of 14%. So eagerly waiting for this company to sort of get listed.
Right. Awesome. Awesome, sir. And finally, the last and the most awaited segment of the week, your weekly hidden gem.
So, capital goods is one space where we've been very positive. It's difficult to find stocks which have been sort of doing well, but we are still looking at some stocks which can still offer upsides. So, the stock I'm recommending is LG Equipment with a target price of 835. Now, this is one company which is got about 22% market share of the air compressor. It is the top eighth largest player globally. 92 and 93% of the revenues is coming from the air compressors plus the balance coming from auto components. Now, last year FY24 was soft for them because they were doing ERP implementation. So since their revenues 54-55% comes from outside, so that segment got impacted. So which is why the overall growth was soft. Now that is largely done. And this company is putting up a capex of 125 crores, and then on top of it, they are spending another 125 crores in setting up service centers across the major global markets what they cater to. So as a result of that, we see or we are expecting that from FY25 onward, we'll see a revival in the operations, and which is where we're looking at a top line growth of say 15%. Bottom line growth should be even better at 25%. And I mean, compared to other capital good companies, this stock is relatively cheaper at about 55 multiples, which is what we have given. But overall, this is one company which has been there for good period of time, has been very rewarding for shareholders. It's a sort of a portfolio stock. You will find some of or in some of our portfolios, you'll find this stock. So which is why we are recommending this company, given the fact that in anticipation of a revival going forward.
Right. Great, sir. Thank you. Thank you so much for all of that. And thank you for your time. We'll be back next week with Pankaj, sir, for another market wrap. Thank you.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.